What's up, guys? This is your boy Repo, back with another trading recap video. Today we'll go over how I made $850 only trading 20 minutes per day. Now let's jump straight into it. Alrighty guys, we're going to be starting at Tuesday since I did not trade Monday. We'll be jumping straight to Tuesday. As you can see here, I took 2 trades today. Now this day was when TradingView wanted to have problems with Trade-O-Vate, and it was just not allowing me to connect my account whatsoever. So I had a difficult time placing a trade. I would have banged out so hard right here. I had shorts lined up for right here, right after 930 hit. Little 1 to 2 RR. And then back here, I also had a trade lined up for when price got above this high on the 5-minute. Here, if we switch to 5-minute, you'll see what I saw. Where are we? 25th. Right here. Okay, so I was planning to take a short within this FVG to go short, take out this low. It was a perfect setup, and yeah, TradingView was not working with Trade-O-Vate. They had some issue with the connection, so only the Trade-O-Vate website worked at the time. So what I did was switch over to the Trade-O-Vate website, put in these 2 trades right here, put in these 2 trades on Trade-O-Vate website. Now what happened was I was on the normal contract for NASDAQ. I was not on the micro. I was on the mini. I went long right here, and thankfully I noticed that within 5 points I was up $300. Keep in mind, I was using 6 contracts thinking this was a micro. It was not a micro. It was a mini. And yeah, I pulled out. I think I was up 300 something bucks. So yeah, that happened. Then I re-entered this trade using half my normal risk. My normal risk is 250. I used 225. Went long here, and sadly I got stopped out. Now the mistake I made here is not keeping my stop loss at the very low that was made. It could have easily been placed down here. We could have still got good RR. Now with the next trade, I believe this was pure emotion off having the technical difficulties of TradingView and getting stopped from this trade I would be winning, a winning trade. I decided to take another long, shooting for 4-hour highs. Now these 4-hour highs are from the previous week, but that was my target. Price retraced below this low and ended up taking us out with, let's see how long this consolidation was. So 17 minutes of consolidation and then took us out. But yeah, that's what happened Tuesday. Let's move on to Wednesday. Alright, now this is Wednesday. I took a short. Y'all see it clearly banged out. Bang, bang, bang. 6 RR trade right here. I do have some unfortunate news though. I only took 3 RRs out of this trade. I know, disappointing. That's one of the mistakes I made, taking TPs too early. Gotta stay disciplined and let price hit that TP, boys. I'm telling you, can't get nervous when price is dropping, especially in your direction. I shouldn't have let it slide, but hey, things were looking really good. Wanted to secure that profit. Anything really past 2 RR, I am very concerned with taking profit past 2RR. And this TP down here was 2.79 RR. So it was a struggle for me to hold to that low. I'm going to be honest. So I took some partials around 2.5. And then I took some at that low. And then on the way down, I kind of just secured 2 more contracts and this left a 1 runner for the final down here, which is good. You know, at least I left 1 runner for the final TP I was shooting for, and it banged out perfectly. Now, going into why I took this trade. The reason I took this trade, higher time frame, as you can see, this is on the 1 minute, but on the 1 hour, this is perfect SMT with ES. And once we see this buy side liquidity get taken, now this is very minor buy side liquidity. Either way, it is buy side liquidity, and it was swept, plus disrespected this FEG, turning it into an inverse FEG. Now, for my entry, I wanted to enter within the inverse FEG, but I decided to take a market short instead of a limit, which was a great idea because I wouldn't have gotten tagged into this short position. That's why you can see my entry is a little bit lower than the inverse FEG. So I got in there quick by a market order, set my stop loss to a candle high that was above the inverse FEG. So it was pretty safe being right here. Obviously, this would be the safest location for a stop loss, this very top, the sweep of liquidity. But that stop loss worked as well because we had a quick retest of this inverse FEG and we broke down. And we took the sell side liquidity, which was London lows. I did not expect price to continue to drop throughout the day. I would have definitely been out of this trade because price ran all the way back up to my break-even point. If I did leave on a contract, I would have definitely been stopped out at break-even, which kind of helps with the fact that this was such a banger short, or it could have been such a banger short. I would have got stopped out at break-even. Anyways, let's get on to the next trading day. All right, so we moved to Thursday, our next trading day, which was not a horrible one, but not my favorite either. So as you can see, we did take this trade before 9:30. We consolidated for a long period of time, which made me jump out of the trade around break even. I'm pretty sure I lost 20 bucks on this trade because I just wanted to cut it after seeing all this consolidation. Usually, consolidation is not a good sign. As soon as you enter a trade, you want price to tag you in and go one direction or the other. It either goes through TP or stops you out. You never want to sit in consolidation, especially as long as this consolidation was, which was around 20 minutes. You don't want to sit in that when you're taking a 1 minute, 5 minute scalp. Okay, maybe you want to sit in that consolidation if you're taking like a play on the 30 minute, a play on the 1 hour, but you never want to sit in consolidation for that long on a 1 minute or 5 minute play. So I got out $20 L. I'll take it, save the rest of my capital. Look at that, price tanked to my stop loss. Right when I got out around here. Pretty sure price tanked, or would have tanked right to my stop loss if I didn't get out. And then we see price take out sell side liquidity. Okay, price comes back up. We have this 5 minute inverse fair value gap. Price goes within it and then comes out of it. This is the low I use to set my stop loss pretty much. I like using places where price went into an order block or FVG as a stop loss placement. Basically where I put up my OTE to find OTE. And this was perfect because we had an inverse 5-minute fair value gap. And we see price accelerate upwards, making a market structure shift, not taking out buy side liquidity on ES and NQ. So this is what I do. I see price come back down into OTE within a 1-minute FVG. I enter long off of this. Price jumps out of my entry. So as soon as I get entered, jumps right out to where it's not consolidating really. I stay within my entry area for about 3 to 4 minutes and then I'm out. Price goes out. So coming back to this trade where it was 20 minutes long, you don't want that. You want something like this where it's in and out, quick and fast. And then I see price get to around 75% away from my first TP. Now this is where I raise my stop to break even. When price gets 75% of the way to my take profit, I'll move my stop to break even just because of how far up price got to where it is. It has a very high chance of hitting my TP and a very low chance of hitting my stop loss. So if it does hit my stop loss, aka returning to my entry, then I'm out of the trade because, hey, I don't even want to be in the trade if price makes it all the way back down there and takes me out, since my bias or my trade was clearly wrong. That's where I mark it as trade was wrong. And some people like to move their break-even point up right away after taking out a swing high or something like that. That's just not how I roll. I like doing 75%. ICT mentioned this in one of his models that he showcased, and it has stuck with me, so that's what I do. Now we see price return back into the consequent encouragement of this 1-minute FVG and bounce off to take buy side liquidity, which is my first take profit. Now, since we did have this chop up here and we were respecting this 1-minute FVG, as you can see, and we broke it down below it, getting very close to my stop loss, which was at break even. Sorry guys, I just had to answer a phone call real quick. But back to what I was saying, we see price come back down close to my break even point or my entry point where I had my stop, and it hit the consequent encouragement of this 1-minute FVG, which then reversed back to the upside where I took a early contract off just to secure profit since we had this consolidation and this 1-minute FVG, and it broke through it, which price shouldn't really be going against any PD arrays that are in your favor. So that's why I took a contract off early, just in case price reached back up here, use this 1-minute FVG as an inversion, came back down, took me out. So secured profit early, a little scare out you could say, but then price shot up, took buy side liquidity. So I aimed for these Asian highs for my final TP, and yeah, so this trade I risked a little bit less since I took this L, technically like an L with parentheses. I lost $20, so I took basically I think the contract, if I added one more contract, it would have been $250, and I didn't want to lose $270 on the day if the trade didn't go in my favor. So I just took one contract off, and I'm pretty sure it was around, I had like 3 contracts on somewhat, and it was 180-ish for my stop loss. So this trade ended up being about like $400. I made $400 off this trade, and that's covering the $20 over here. So $420 I made off that trade. Let's go on to the next trading day, Friday. Boys, this is the one that I've been waiting for. The most recent one. You can see the entries on the screen because I am connected to my Apex account. Now, I took a short right here. This was a textbook short, I would say. There was some SMT, I believe, with ES. It was right here. We had SMT on the 1 hour, which means, and it's SMT to the upside, which means you would prefer longs in this scenario. So right off the bat, I was a little iffy about this trade, even though longs did not perform well, as you can see. But I was a little iffy about this trade. Put my stop above here. This was right around pre-market. Let me put up the PD raise I had. So OTE, FEG right here. Putting my entry above these little highs that were made on the 1 minute. And yeah, this is where I entered. As you can see, 2 contracts short. And I got stopped out up here. Now, the reason I say this is a textbook short is because price was ready to accelerate lower. Now, this could have been the perfect short opportunity for the lower prices. As you can see, we had this 1 hour FEG, and this is what I used. As I said earlier, I like to put my stops where price has bounced off of order blocks / FEGs. So this is what we saw in the 1 hour, and this is basically where my stop was placed. Let's go back down to the 1 minute. Come back to this trade. All right. So as you can see, this is within the 1 hour FEG. Left that perfectly. It did not take sell side liquidity. So I anticipated price to retrace back into this FEG OTE right here and reverse back down to take sell side liquidity. Now, price wanted to take buy side liquidity. As you can see, it wasn't even 9:30, and we just shot up, took minor buy side liquidity. We didn't even take the very high. Took minor buy side liquidity. I then decided, okay, my bias may be off, and this was more of an emotional long than any type of real trade fundamentally. So I went long off of this. Now, what I used to go long, I think it was on the 5 minute. This was a very quick in and out long, but pretty much you can see my stop was at the bottom of this candle, and my entry was this FEG. Now, I expected price to dip down into this FEG, quickly come back up and take the final high that we had up here, the final buy side liquidity. But price decided to shoot down and take out my stop. Now, as I said before, this was more of a emotional long than anything. I was about $100 away from the requirement for a payout. The amount you need for a payout on Apex is 2.6K, and I was at 2.5. So these trades were both half my risk as well. I really didn't want to trade this day at first, but then I considered taking a half risk trade just to see if I would be able to secure those 100 bones to get a payout. And this is exactly why, if you're having a good week, you should lay off these rough days like Friday. At least for me, Friday is a rough day. The price action really isn't that good, and I don't prefer trading on Fridays. I like trading in the beginning of the week. This is something that ICT does and talks about, how he trades Monday through Wednesday, and if he has good days Monday through Wednesday, he will not trade the rest of the week. Now, this is a great idea, I believe, and I want to implement this into my trading for next week and so on, because Friday, as I said, really isn't my day to be in the market. Now, we are at right now $2,250. Now, last time I spoke with you guys last week, I was at 1,400. So I ended up securing $850 this week, and that's a perfect W. That's a perfect way to end the week. Yeah, I can't complain. We are $350 away from a payout. Next week, I will be shooting for this goal, but I will stay careful on my toes, since we do have some questionable red folder news. But besides that, I am going to be shooting for the payout requirement, securing that payout, and adding on 2 more accounts, most likely, and securing the other funds. This video is showing you a prime example of how you can capitalize every day, pretty much, of the trading week and secure profit just in 20 minutes. You can secure a dub. 20 minutes. I secured my first take profit right here Thursday. Now let's go back again. Wednesday. You can see this trade was no longer than 18 minutes. Okay, under 20 minutes. You can bang out and make a lot of cheddar just within 20 minutes of trading. Now, this is what I like to do. Get in and out quick. Right here, this trade, I made $750 within 18 minutes. Okay. This will be the end of the video. I'll be wrapping it up here. Hope you guys have a good day, and I hope you learned how you can capitalize on only 20 minutes in the market.